And joining us from New York, we have Gillis, Director of Research at BGC Partners. Colin has a hold call on Microsoft and is celebrating on Amazon. Good to have you, Colin. So you were expecting some good numbers from Microsoft. We got them, $4.5 billion in profit. What did you make of these figures, and can they continue this for upcoming quarters?
Yeah, Susan, so definitely it's a tale of, two different types of customers. When you look at Microsoft's results, we got 7% revenue growth, 4 cents of upside, 175 million copies of Windows 7 sold. And this shows that the enterprise customer is spending money, right? Businesses are out there, they're refreshing their PCs. The average age of a PC is about 4.5 years, so it's time to invest. On the other side, Amazon, which serves the consumer, really missed expectations. People were expecting for, more than they got delivered. The EPS missed because the company continues to invest in marketing, and the outlook was more tapered because, the reality is the U.S. consumer is slowing their spend.
Yeah, okay, well, let's break it down first with Microsoft, Colin. I mean, you talked about Windows 7, the best-selling operating system for Microsoft, and then we have Office 2010. Some would say the blockbuster products for Microsoft are already on the market. What about product lineups and coming up with another big seller in the pipeline for Microsoft? That's a bit of a concern.
Well, that's it, and we all knew a good quarter was coming. In fact, Microsoft's hosting their investor day a week from today out in Redmond, Washington. They weren't going to deliver bad results and then have us all fly out to Redmond, Washington. So with the numbers from Intel and some of the macro data showing, PC shipments are around the 20% level, this quarter was expected. And the reason we have a hold rating on the stock is because it didn't move the needle, right? People want to say, what's next for Microsoft and what's their strategy for, some of the new emerging businesses, right? Mobile and social and search.
Yeah, what is next for Microsoft? They have a cash cow. Basically, their products generate a lot of cash, free operating cash each month. Also, they have $40 billion in cold hard cash. Some are disappointed by what they're giving back to investors in terms of dividends. I mean, what are they going to do with all this money?
Well, all the tech companies in my space are, hoard their cash. And, in fact, Microsoft's one of the best at it. At least they're constantly buying back stock every quarter, and they do pay, a small dividend each quarter. So, albeit slowly and at a lower rate than they're generating cash, at least Microsoft is making some effort to return that cash to investors.
Okay, well, you just raised your target price on Microsoft to $29, Colin. Now, I quickly want to move on to Amazon because we're running out of time here. But, what happened to Amazon? Because didn't they just flaunt their Kindle readers and how they're selling more Kindle books than hardcovers in the past 3 months? But they came up pretty short here.
Yeah, and when I saw that Kindle press release hit on Monday, I knew that, hey, they don't want to get the Kindle data caught up in the bad press that might be coming on their earnings report. Plus, they also put it out in front of Apple's earnings. And this is an important part on the Kindle. They're running a whole lot of television ads. Their marketing expenses were one of the reasons why their EPS missed and why their forecast is light from expenses. They can no longer just rely on people buying the Kindle as the only game in town. With Apple having the iPad, it's real competition in the e-reader space. And so that's just a negative for Amazon.
Yeah, you're saying sell Amazon. I think you just cut the target price to $110 for Amazon shares. What's the future like for Amazon going forward if they're just relying on the Kindle? Does it look good?
Well, so you have to separate Amazon as a company and Amazon as a stock, right? Amazon is a great company. They definitely have high customer satisfaction. E-commerce continues to be growing as a percentage of total retail. But Amazon as a stock is very, very expensive. It is the most expensive stock in our universe. It's about twice the valuation of 30 times what the average company trades, which is around 15 times their forward earnings. And, Walmart trades around, 13 times. You've got Microsoft at 12 times. So, if Amazon's growth slows, which is what happened this quarter and what the outlook is for the September quarter, this could be stuck in the mud for quite some time, definitely until we get closer to the Christmas season.
Wow, that was all-encompassing, the most expensive company in the universe. Colin, nice talking to you. Thanks for that. Colin Gillis, BGC Partners.